To remain updated with the latest business news, click on the bell icon.
Markets continue to be volatile, and at a time like this, we suggest some mindful strategies to ensure you're making sound investment decisions. Do send in your queries on the number on your screen, and we'll be answering a select few every Wednesday. Let's kickstart our first question today. Mohammed Ashraf in Mumbai. Let's listen in to which stock in particular Mohammed is exploring.
Hi Udayan, I bought 275 shares of RBL Bank at an average price of 481 in 2017. Do you think it's a good idea to buy more at current levels if I can hold for the next 10 years? For your information, I also own HDFC Bank, Kotak Bank and IndusInd Bank shares as well. Thank you.
Well, Ashraf, I think the other banks in your portfolio probably will give you more joy than RBL, because as you know, RBL's not done very well over the last 3 or 4 years. You are sitting on losses yourself, and substantial losses at that. I'm actually not a very big fan of small private sector banks. I know people buy them in the hope that they will become big one day and they will return or create the kind of wealth that HDFC and Kotak Bank have created. But if you look at the track record of these companies, I mean, whether it's RBL or Federal Bank or DCB or Karur Vysya, they've only flattered to deceive. And I don't see anything changing meaningfully in the medium term. You can say that RBL is cheap in terms of valuations. It probably trades at what, 0.8, 0.9 times book, which is for a private sector bank quite inexpensive. But that's just one part of the story. Their asset quality is still tricky. There are still fairly significant slippages on their MFI and their retail book. And I'm not convinced that the management has got its act together compared to some of the larger private sector banks. So if I had to own financials, I would say that if you already own the good public private sector banks, you could consider buying some of the best NBFCs, best-in-class NBFCs, particularly the ones which are focused on individual niches. They seem to have very good value right now. And at this kind of valuation, you can even consider the top 2 public sector banks. But I would probably not advise you holding on to some of these smaller private banks for a 10-year horizon. I think there are better picks out there.
Krishanu Mehti also writing in from Kolkata. He's got an investment in L&T Tech, and I'll let him explain the nature of his query.
Hi Udayan, I am holding 25 shares of L&T Technology Services at an average price of rupees 2,500. As a long-term investor, I am very optimistic about its business model. What is your view? Krishanu Mehti, Kolkata.
No. Well, it's an excellent stock, and you've bought in at a very good price point. You've already doubled your investment, and there is nothing to suggest that you should be changing your strategy on this name. It's a very good management, excellent pedigree of parentage, very strong hold in the infrastructure, industrial, engineering, industrial and digital domains. And no wonder that they're growing faster than the best companies in the Indian IT services space. I think the management is already guiding to 20% plus revenue growth year on year, which is excellent, which means their profits will probably be growing at 30% plus over the next 3 years if you take an average. And that's better than most of the frontline IT companies. The only argument against L&T Tech is, as you would agree, is that the stock has become quite expensive now. I mean, trading at 40-45 P multiple, which is what, 60% premium to even the Infosys and TCS of the world. Of course, it's growing faster as well. But you know, you've gotten at a great price point. You don't need to worry about the valuations therefore. And if you can take some consolidation in the share price in your stride over the next few quarters, I think you should be fine in the long term.
Okay, I also like the fact that so many of our queries today are for the long term, and that's really what we encourage. B.R. Bhatia also from New Delhi is looking at SEQUENT Science. Let's listen in to this query, and you know, a lot of questions on whether or not some of these are the right investments or one should be looking at alternative choices. Listen into this particular question.
Mr. Udayan, I've got SEQUENT Science shares at the rate of rupees 300. I'm holding it say for the last 2-3 months. Could I hold it further or should I book loss or switch to any other shares if you can suggest something? Thank you.
Well, you've gotten at a high price point. The entry price is not great for you because, the stock had gone up quite a lot, Sequent Scientific, from 100 to 300. You bought at the top end. I think you went up to or topped out at 325, 330. And then the stock has come off to about 175, 180 levels. So you've lost quite a bit. You're sitting on significant losses out there. I think the correction is a factor of how quickly Sequent had gone up, because it seems like a good company. As you will know, that it was carved out of Strides Arcolab. Their animal health business became Sequent Scientific, and it has very good parentage now because Carlyle, the private equity player, is the majority shareholder in Sequent. So it's not like it's a bad promoter group or anything like that. Animal health per se is a promising area because growth indicators are good. And Sequent Scientific has presence not just in India, but a fairly significant presence in countries like Turkey and in other parts of Europe. Carlyle's presence in the management also will unlock some doors for many other destinations and different product categories. So per se, there is nothing wrong with Sequent Scientific really. The business is good, and I think the price needs to consolidate, and I would probably be a bit patient and hold out without being too despondent about the losses which have been incurred since you entered the company. Maybe give it some more time, but I admit that it's been a disappointment over the last few months, but maybe give the management a little bit more time.
Okay, we have time for one more. Arjun Jain from Nagpur has M&M, and let's listen in to his query, particularly given the kind of tumult that we've been seeing on some of the auto names.
Hi Udayan, good to see you. I am Arjun Jain from Nagpur. My query is pertaining to M&M, Mahindra and Mahindra. I am holding shares from 2016 at the price of 916, and the shares are approximately 100 shares. Should I hold it, or should I exit? Because if on the compounding basis, it's hardly getting 2% to 3% return. So what is the future of Mahindra and Mahindra?
It's a tricky space out there, and I, hand on heart, cannot say that you will make a ton of money from M&M in the future from here on. I don't know how this auto space will play out, because it's an excellent management, Mahindra and Mahindra, and the stock is very cheap. It trades at about something like an 11-12p multiple. So there's nothing wrong with the valuations or the management as such. But the space is probably struggling a little bit. As you can see, that tractor sales are very sluggish over the last few months, and this year will probably be a bit of a washout year for tractors. Sure, on the SUV front, M&M is doing better. And initial indications of the kind of sales and order pipeline in XUV 700 and Thar are both quite encouraging. So I think the SUV piece is not looking bad. But in the future, to unlock value from M&M, I think they'll have to come up with a really credible EV plan, electric vehicles plan. And on that, we are not terribly clear which way M&M will swing, because that really is where the money will be made going forward in the auto space, not in traditional vehicles. So you can hold on to this stock. I don't think you'll lose a lot of money, particularly because the subsidiaries are very, very valuable in M&M. Of this 900 rupees share price, maybe 300-400 rupees is just coming from the subsidiaries, which is your investments in technology and finance, which M&M has. The rest is the core business, which is the lumpy, tricky one. So I don't know. My guess would be that M&M will probably trade in a bit of a range, not lose too much money, not make too much money in the next year or two.
If you like the video, do like, comment, share and subscribe.